Buckle up for another episode of Riding with Your Brother.
It's me, your host, Sean Bailey, and today we are going to be talking about how much money you need to get into your new dream home. First things first, we're going to talk about your down payment. How much money do you need to put down to buy a home? It is not what everybody thinks. You do not need 20% down to buy a home. If you want an FHA loan, 3.5% down. For every $100,000, that's $3,500. If you are doing a conventional loan, 5% down. Unless you are a first-time home buyer, you can put 3% down. Now, if you are a veteran and you are using a VA loan, whether you're active or retired military, you can put $0 down. Or if you wanted to use an USDA loan, you also can qualify for a 0% down payment. With that being said, there are other programs that Fannie Mae and Freddie Mac do allow that can give you a 0% down payment as well using down payment assistance. There are some programs out there that are grants. There are some programs that are out there that are second liens to the house that you can pay off in 10 years that are built into your mortgage. So be aware when you're looking at those DPA programs that you're not actually hurting yourself in the long run, but there are programs out there for people who qualify, them covering your 3.5% down. The next topic we're going to be talking about on how much money you need to close is your inspection costs. And those are going to be all up front. So when you find your house and you go under contract, your realtor will set up an inspector to do a home inspection and an appraisal that you will need out of pocket. Generally, depending on where you are and how big the house is, your appraisal costs can be anywhere from $450 to $700 up front, and then also your inspection can be anywhere from $250 to $400 depending on what company you choose and where you are. So realistically, it's a safe bet that you're going to need $1,000 up front to be able to pay for your appraisal and pay for your home inspector. The next item on the list is going to be paying your title fee. So typically every state is going to be a little bit different based on taxes and county taxes and mortgage stamps and deed stamps and commitment letters and blah, 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 blah. Your title fees are generally going to be around 1 to 2.5% of your loan amount. So be ready for that. The fourth item on the list is going to be your escrow reserve build. Your escrow is what your mortgage company collects in taxes and insurance every year. When your property taxes are due, they pay that for you on top of your homeowner's insurance. When you buy your home, the first thing that you need to do is build that bank, build that escrow reserve so the bank and the mortgage company can pay your escrow, your homeowner's insurance, and your taxes when the time is due. So sometimes they'll need to collect for a 6-month reserve, a 3-month reserve, but your homeowner's insurance will always be a 12-month upfront cost of the policy, which can range from $1,000. I mean, if you're here in South Florida, anywhere from $7,500. So make sure you're paying attention to how much your homeowner's insurance is going to cost you. That's a big part of your monthly payment and your cash to close. Generally speaking, you're going to be around the $2,500 to $3,000 a year mark, and that will need to be collected at closing. And lastly, have an educated loan officer to explain Section A of your loan estimate, where it'll break down origination, discount points, processing, and underwriting. That will all go to your mortgage lender. So anything under Section A on your loan estimate goes directly to your lender. Everything else goes to title, goes to the county for taxes and insurance, goes to escrow. But Section A on your loan estimate is going to be how much money you're spending for your mortgage. It's very important that you try and get that number as low as possible. If you're looking for a good rate, looking for a good cost, if you have a loan estimate that you want me to analyze for you to make sure you're not getting screwed, give me a call.